Welcome to our first Traders Corner of 2017, and as always, I'm joined by Garth McKenzie, founder and editor of the show. But it's not going to be as always for the show this year as we go into our 8th year. Garth, and that's where I'm going to start the program tonight.
That's right. Welcome, happy New Year,
Indeed,
and Happy New Year to all the viewers. Yeah, we've got a slightly different format this year. Traditionally, we've always put up 250,000 Rand as a starting capital at the beginning of the year. This year, what I've decided to do is make it a little bit different. I'm putting up 100,000 Rand in the local account and 10,000 pounds into an offshore account. So effectively, if you know your exchange rates, it means we're putting in around about 268,000 Rand or there and thereabouts, something like that, in terms of actual capital into the account. And then we'll be looking for trading opportunities in the local market as we always have done, but also we'll be looking for trading opportunities on the offshore markets as well. And that's where we'll be looking to trade that 10,000 pounds. And just because it's 10,000 pounds doesn't mean we have to trade what's in pounds. We can also trade dollar-denominated shares or euro-denominated shares. Effectively, that 10,000 pounds is just our starting capital for an offshore account that we'll start this year.
I mean, to some extent, it's a sign of the times. And, you know, we could have done this maybe last year or a couple of years ago. More and more people are trading offshore and opening offshore accounts. It's a lot easier to do that now. And this is just a way to, I guess, diversify the show somewhat.
Yes, that's right. And I think it makes it a little bit more interesting. I've been trading the overseas markets in my own capacity for a long time. And it's something nice and fresh to bring to the show. And you're right, because the barriers to entry have really come down a lot for the viewers to be able to trade offshore themselves, we may as well come to the party and provide some analysis for the offshore markets as well.
But God, that's pretty much the only change, so you can't accuse us of inconsistency. Yeah. And I guess that's also where I'd like to maybe reintroduce the show to people who maybe aren't that familiar with it. Proper trading principles is really I guess, the bedrock of Traders Corner, and I know you want to go through those.
Yes, that's right. So, I mean, we always talk about focusing on proper trading principles on this show. We put up real money, we trade that real money with the intention to try and make profits that we can then donate to charity at the end of the year. But it all focuses around promoting proper trading principles. So the show is educational as well as seeking to try and generate profits for the charity at the end of the year. And I'm a big believer that there are a couple of simple things you need to get right as a trader. And if you can get those simple things right, then you'll generally be quite successful. And we focus on those simple things. And it's simple things like, for example, sizing your positions correctly, trading with the momentum, making sure you use a stop loss, not adding to losing trades. You know, basic stuff that I see amateurs getting wrong all the time. And if you can not make those mistakes, then you can generally be quite successful. And we now, as you said, into our 8th year, we've made good profits every year out of the last 7 years that we've been doing this show. And it's not rocket science. It's just following a couple of basic rules and being disciplined.
Yeah, exactly. Discipline is actually maybe the hardest thing. And as you mentioned, all profits generated go to charity at the end of the year. We've been able to do that for the 7 years we've been running the program. Yep. Garth, you also want to set out your goals for 2017, which are also pretty consistent with what they've been in the last 7 years of the program.
Yes, every year I set out to try and achieve these same goals. And I don't change them because I think they're good goals and they're realistic and they're the goals that I can have some control over. You know, a lot of people might start out their trading year and say, well, my goal this year is to make 40% return in the market. Well, that's lovely. How are you going to do it? You know, rather set goals that you can actually achieve, and then the money hopefully will come as a byproduct of that. So these are the 3 goals that we always strive to achieve each year. I want 2 out of 3 of my trades to be winners, and that's realistic. Some people might say, well, why don't you want all your trades to be winners? Because that's not how it works. Trading is not as simple as that. To get 2 out of 3 trades as winners, in my experience, is doing well. Average winners need to be 3 times bigger than my losers. And we didn't achieve that last year. We had not a great win-to-loss ratio in terms of the percentage gain on profits. Nevertheless, my aim is to try and ensure that all our winners, on average, are 3 times bigger than what our losing trades are. And then the final goal is just to be patient for high-probability trading opportunities and wait for them. Don't force trades. But I do want to be more active than I was in 2016. We mentioned at the end of last year's show that we were not very active. And I think by introducing the offshore markets this year, there's no excuse not to be reasonably busy this year.
Well, exactly. It gives you a massive universe of stocks to trade, not just stocks, currencies, whatever you want.
Correct. Overseas indices, there's multiple things overseas that you can trade as well.
Yeah. Okay, but patience is a virtue.
Yeah.
Garth, and I know that you'd like to look at a couple of charts tonight. We always start off with the bigger picture.
Yeah.
And the Dow Jones, normally we look at the S&P 500, but the Dow Jones is very interesting at the moment, particularly as it's brushing up against this 20,000 level.
Yes, that's right. We're not doing any new trades to start the year, so I'm going to just go through a couple of big picture charts, starting with the Dow Jones, as you mentioned. And obviously the big headlines at the moment are Dow Jones 20,000. Now, it hasn't quite touched 20,000 yet. It's got very, very close. And you can see, just looking at that chart over there, that is the chart of the Dow Jones Industrial Average. You can see that flat top over there is basically 20,000, and you can see how the market has pushed up against that level. It's becoming quite a meaningful resistance level over the last 4 weeks or so. My expectation is that it will eventually break that 20,000 level, and I don't think it's just going to stop and go to 20,000 and then turn down. I think once it pushes out through 20,000, you probably find it's going to probably add another couple of 100 points on top of that as well before it succumbs to some sort of a correction. So I think keep an eye on that. Overall, my feeling is still that it probably needs to touch 20,000 and at least push through, I think.
So in other words, because if you look at that rally from November last year, it's the Trump effect on the markets, and particularly on the Dow Jones. You're clearly expectant of more of a rally to come, because one could easily maybe look at a pullback from this point.
You could, but I think what you've also seen in the last, 4 weeks now, that it's gone sideways. That to me actually looks more like a correction in time rather than a correction in price. It's had every opportunity to actually pull back and come down, and it hasn't done that. It's rather been going along sideways. So my feeling is that when you get a sideways consolidation like that, it is a correction in time, and it usually will follow through to the upside. Even if we maybe do get a little bit of a sort of a false move down first, I think ultimately the Dow will push out through 20,000. And if there's any weakness in the near term, I'd probably consider that as maybe a buying opportunity to try and then get on board for a push out through 20,000.
What about the local market? Because last year it was really very disappointing. I mean, the return was somewhat negative.
Yep.
We managed to outperform the markets, thankfully. But if you'd bought a tracker fund, you'd have had a really dismal year.
Yes, that's right. The top 40, if I'm not wrong, I think ended the year down 4% or thereabouts. It was marginally negative for the year. A lot of that had to do with the fact that the rand was very strong last year. It strengthened significantly from January all the way throughout the rest of the year, and that did weigh on our market to a large extent. Particularly the last 4 months of last year, you can see that the top 40 index has been trading in a downward sloping channel over there. But over the last few days, the market has begun to push out through the upper end of that channel. And now the big question is what happens here. You can see there's sort of an overhead resistance area here at about 44,500 on the top 40 index. And if the market is able to break out convincingly through that 44,500 area, then that could begin to validate an inverted head and shoulders, which you can see marked out over there. And if that were to be the case, then in strict technical terms, that projects a move up about 2,000 points, which would take us to around about 46,500. So I think it's worth keeping an eye on that in the weeks ahead. For now, if it can't break out through 44,500, then we need to be skeptical of that. But if it can get convincingly out above 44,500, then I think it does potentially open the way for a bit of a rally.
And I mean, that's the overall market, but if we had to look at the different sectors of the market, and you've got these relative charts that you want to discuss, and that's maybe where one might want to focus one's attention in the weeks ahead.
Yes, this is very interesting. I picked up this yesterday, and I noticed that these relative strength charts of the FINDI and the Resi, which we'll also look at in a moment, are looking very interesting. Last year was a year where the FINDI sector, in other words, the financial and industrial sectors of the market, very much underperformed the all-share index.
Yeah.
And the resources sector outperformed. Now, that was very different to what we had become used to in the previous couple of years. Since this bull market began in 2009, it really had been all about the domestic stocks, your financial and industrial stocks, that had led the rally in the market at the expense of the resources shares. And I think many people went into 2016 thinking, well, that's just the norm, that resources underperform and FINDI stocks outperform. It's happened for the previous 5 or 6 years, so why is it not going to continue? And of course, last year, that whole theme was flipped on its head. And what we got last year was a year where the Findy sector actually underperformed the market quite badly, and the resources sector outperformed quite nicely. But if you have a look at the long-term charts over here, what you can see is that this long-term trend of Findy outperformance is actually still very much intact.
Yeah, it doesn't actually, that kind of masks maybe the pain one felt last year.
Well, that's it. If you have a look, I mean, that section in the top right corner of the page there, that is last year, that's 2016, which shows how the Findy sector underperformed the all-share index. But in the context of what's we now 7-8 years into this bull market, you can see that really was just a correction within an overall upward trend. And what gets me interested now is the fact that this long-term upward trend is approaching. That relative chart is very close to relative support. And this suggests to me that we need to maybe just question this notion that the resources shares are just going to continue to outperform at the expense of the Findy shares. Maybe if this technical structure is anything to go by, we should actually adjust that thinking to the possibility that we might actually get Findy stocks outperforming again this year. And I'll explain more why I think that's a possibility in a couple of slides' time. But if we look at the resources index relative to the all-share index, now doing the same exercise as we've just done for the Findy, but now looking at it in terms of the resources sector, what's very evident here is that this long-term trend of underperformance by the resources shares is also very much still intact. And last year, 2016, did see the resources shares outperforming the market. But in the bigger picture, it's just an aberration on that graph. The long-term underperformance trend for resources remains intact, and what's notable is that we're getting very close to that downtrend resistance on this relative graph over here. So if you take these two charts together, I think there's a possibility that we could actually see some sector rotation this year away from the resources and back into some of the Findy stocks. And in light of that, I think I'm going to probably look to focus a lot of my attention onto the strongest Findy stocks this year if I'm wanting to trade the market from a long perspective. It's just a little bit of different thinking, and I think it is kind of contrary to what the conventional wisdom out there in the market is at the moment.
Well, I mean, the technical case for it is quite compelling. What about some of the fundamental factors that would influence maybe looking at shares rather than the financial and industrial indices?
Yeah, so in that light, I'm going to look at the US dollar index, and then I'm going to look at the rand dollar exchange rate. The reason for looking at the US dollar index is because it's broken out. This is now a weekly chart of the US dollar index going back over the last 3 years. The dollar index is effectively an index of the US dollar versus 6 of its major trading currency partners. You can see that this chart has gone sideways for 2 years, but now in the last couple of months, it really has come about since Donald Trump won the US election. You can see how the US dollar has broken out through the upper end of that resistance. So a strong dollar is typically not very good for commodity prices. That'll be a headwind for commodities, and hence could be a headwind for resources shares as well.
And what about the local currency? Because that's going to have an impact on us.
That's right. So here's the rand dollar exchange rate, also a weekly chart here. And what's clearly evident, this is now effectively the whole of 2016 that we're looking at there with that downward sloping channel. You can notice how the rand strengthened throughout last year, and it seems to still generally have this strengthening bias to it. That red line there is the 50-week moving average, and notice how it's begun to turn over. And I often look at the direction of a 50-week moving average to determine whether the long-term trend is up or down. And in this case, it's actually telling us that the rand is starting to show medium to longer-term strength. Over the last 5 months, the currency's been trading in a range between about 13 Rand 30 up to about 14.50. It needs to break above or below the bottom or top of that range. My bias is that it'll probably break to the downside. In other words, we're looking for the rand to go stronger in the absence of any unexpected political noise.
And that would be good for industrial and financial stocks.
That's it.
And probably not great for
Correct.
resources.
Yeah, a stronger rand is helpful for your Findy stocks and not so much for your resi stocks.
Okay, so that's sort of the bigger picture for this year. Goss, just to end off with a reminder that people can subscribe and get a weekly alert as to what's happening on the show.
Yes, that's right. We've got a free mailing list that viewers can go and subscribe to. Go to traderscorner.co.za and you'll see in the middle of the page there's a link to a free weekly email. Go and sign up. It's very straightforward, and then what we'll do is send you an email every Tuesday detailing what is coming up on the show for that week.
Great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.